devices.
Let's find out what Scott Brown thinks. It would be helpful to hear from the incoming Fed chairman. Scott is chief economist at Raymond James Associates in St. Petersburg, Florida. Good morning and welcome. That's actually
Paper.
Is there anything that she might say on the downside that might set Wall Street off or be harmful to the economy?
I don't think so. I think she's going to be very judicial in her comments about the tapering. Clearly, I think the Fed was a bit taken back by the market's reaction to the talk of tapering. It shouldn't really have come to any big surprise that, the QE can't last forever. And again, as I mentioned, the Fed's going to emphasize that forward guidance on short-term interest rates is really providing continuing support for the recovery.
Is there a threshold at which continued tapering becomes more of a drag on the economy than a help?
Not necessarily a drag on the economy, but you could see the development of financial bubbles going on, excessive risk-taking, and so on. We had a lot of that discussion a number of months ago, and I think the initial talk of tapering kind of wrung that out of the market. The Fed's going to be on guard to see whether there are signs of bubbles going forward.
Talk, though, that this ongoing tapering is sort of not really being productive to the economy, that basically the banks and investors are sort of ferreting away the money.
Well, in some sense, we were seeing that the asset purchases are less effective over time. I think they certainly did have an important impact on a lot of the interest rate-sensitive sectors of the economy, housing and autos.
Okay, enough of that. Hello and welcome in from Sunnyvale, California. I'm Mark Vierra, and this is my basic analysis video. And don't usually go over the weekly percentages, but in this case I think it's worth taking a quick peek on how we've been doing. Of course, 1.5% for the week. This is what we're doing for the month, 2.37%. Almost 7% for Q4 so far. But big reason I wanted to go through these percentages is just to show you we're up 40% from 2012. This is from January. From the close, December 31st close of 2012, 28%. That's astounding. That is just really, I think I hear singing and dancing in the streets. The party is going on. Here we go. So that's it. Market is just doing really spectacular this year. So let's close this up. And good thing I have some long positions, investments more like, and that's another thing I wanted to draw a distinction here. If you're an investor, then this video is not for you. This is trading, and I draw the distinction between, I think the biggest difference is we don't care about the story, the narrative doesn't, we put our side blinders on as traders. We're looking at price, whether the charts technically are supporting this level. We look at price levels, volume is equal to time, price over time. We look at mathematical, statistical information and data to get that edge. And I want to make it clear that it's not about being right. We don't care about being right. It's nice to be right, but we know we're not going to be right every time. And the idea is if you're trading properly, you're managing the trade, and you're limiting the risk, and you don't have to be right every time. You can be wrong more often than right, and still make money if you're trading properly. The methodology and techniques and stuff I go more about in my trading log, and YouTube viewers, I'm going to have links to all this stuff. Let's get right down into the charts now. And we'll start off with a monthly. Is that going to open? Come on. There we go. Alright, I have all of these on images because I'm getting these ready for my trading log. Just point out for the monthly, this is an important pivot line that on the monthly candle still above that, and we are knocking at heaven's door over here. The 1800 is a very key psychological level that that we are approaching now on the monthly. Looking at the weekly trend, we can see how price is reacting to this. You get more of a closer view at the price action on top of this pivot level and the 1800 mark. Looking at 1674 next week will be a good level above or below that, bullish or bearish type of situation. So far the charts are looking quite positive, and we can't argue with the trend. It is what it is. So let's look at major longer term or intermediate term support and resistance. We can look at a fib extension. This is basically the distance between here and a previous high. Then you have a pullback, and then added to that you would get these percentages. This would be 100% would be the same distance between here and here. And I always throw in the 125. I think is missing from most of the fib analysts, but that's going to be an important support level here. Of course, we'll have resistance at the 161 would be the next Fibonacci level at 1815. So those are key levels that traders are looking at. The only weekly chart pattern, we've been in parabolic mode, so it's difficult to get these patterns. And yeah, I'm just looking at this big pennant here for the longest time, and we're just about to get, I could almost just say, you know what, it's close enough. So target met on there. Daily trend lines. Okay, we have this rising wedge on the daily that has broken above another pivot. Okay, it's resistance, it breaks above it, it pivots, and now this is going to be, we're going to look at this for support. What I write in here, resistance after resistance break, we've seen the candle spread reduction. Okay, we'll get more into that with volume. And yeah, so that's the daily. We're in parabolic mode. We've have also, I'm going to get into chart patterns because we've got a rising wedge within a rising wedge, and that's an interesting kind of little phenomena. What else here? Oh, the regression channel. This is 3 years regression, and we're at top part. That's something to note. Okay, moving averages. You know, our near-term moving averages are rising. Of course, the further we get from the 20 and the 50-day average, you know, the looser this rally is going to get. We have the Bollinger Bands contracting, and that has meaning in terms of it's an indication sometimes that momentum's about to change. So it's not perfect, but it's something we like to look at. The other thing here is I'm seeing is we're showing some bearish divergence. Our oscillator is it's actually at a key spot here. So we're going to have to pay attention to this to see if we get above this, then this is going to lose meaning. But if we continue to put in lower highs on the RSI and these higher highs, that's a bearish divergence. Okay, something to note there. In terms of chart patterns, here's our longer term rising wedge. Of course, we had this tweezer bottom, and that defined the bottom trend line. We tested that here again, and I look into volume. We'll get into a little bit of Wyckoff theory in a Wyckoff schematic, and go into what is a creek and this and that. But here's a longer term rising wedge. Here's a shorter term rising wedge. Now on the SPY, it's kind of a 3-candle reversal, which actually, if you look at the percentages, it ended up being more of a continuation than a reversal. So that doesn't mean much when I'm looking at this pattern. Just throwing it in there because I like to keep track of candlestick patterns. And here, rising wedge. Now, the market psychology behind a rising wedge, of course, is very basic. It means parabolic only lasts so long, and eventually we're going to see a breakdown of this. And also, another interesting pattern. Let's see, since we're on chart patterns, let's look at that. That's the wolf wave. And what it says is if you get to this 0.5, so here's 1, 2, 3, 4. 0.5 would be your entry zone. And we're drawing a line from 0.1 to the bottom of 0.4 to give us a target. And where the lines intersect is our estimated time. So, in theory here, somewhere in December, we should see 1755 if this pattern plays out. That's something I'll be looking at. So in pattern targets, something else in my log I keep track of. All of these we've met, and we're just darn near here to this weekly pennant and flag business. So that's it with patterns. Now for volume, let's take a look here. Having trouble with my left click dexterity here. Okay, oh my gosh, there's all kinds of stuff in here. Where to begin? Yeah, let's start with Wyckoff. We have somewhat of a creek here. Of course, this is in a longer term markup phase. So it's not, how can I say, typical Wyckoff charts you're going to be looking at, they're going to look at the creek as somewhat at your bottom, where I'm looking more of a near term than that, and I'm saying that this rising wedge is a creek. This tweezer bottom is a secondary test of supply. We've jumped across the creek, and we are in a markup phase. So that's, and volume, I'm still looking at these higher levels of volume to give me a clear, hit me in the head with a hammer, you know, and an obvious, I wrote in here, upthrust candle to really make it a no-brainer. Now that doesn't always have to happen. So I'm also, that's why I look at this oscillator here and how it's developing like a symmetrical triangle. It's coiling up for another move. I think we might get another pop to the upside here before we get a consolidation back to our mean. In this case, the point of control, the most shares taking place on this 3-month time frame is right here at 168, 169, or 1690 area on the S&P 500. And I look at the S&P 500, I look at indexes, not real big on individual names. And that's what this video is for, traders, and we like to look at indexes, and that gives us a picture of the markets. So what else in volume here? I think we need to look at the intraday charts that will kind of give us credence to what we're looking at on the daily charts. And still the oscillator is at a key. This could keep going up, all right, but we could see some bearish divergence. It's still unconfirmed. Here, these blue triangles are successful. I know it sounds backwards, but it's a successful test of supply means that there's limited or no supply in the market. That's why we have price going up. Drawn a channel or a trend line down here to see if and when demand catches up to supply. If it breaks this, that would be your ultimate confirmation on movement. And overall, this declining volume on the move up means that the market is losing somewhat some steam here. And as I mentioned previously at the chart patterns too, the spread, the volume, the effort or the result versus the effort, we see that these candles are, the spread is declining. So that also gives meaning to the decline in momentum. Okay, and let's look at some more of these volume nodes are interesting, and I'm looking at on the monkey bar. Okay, this is the equivalent to the market profile. See if I pronounce this right. If you've ever watched Peter Seidelhuber, I don't know if I'm pronouncing that right. In any case, market profile is a lovely thing to look at. I also have overlying volume by price. Okay, and here is volume by time, volume by price, and I'm looking at this is an ideal candidate for the next. This could be the next point of control, or what is considered fair price. This is where most of the shares are changing hands at that price, and we consider that to be fair price. Also, I want to show you that we are getting slight signs, not a whole lot, but like this blue volume by time right here is a lot of activity is telling me that it's possibly seeing some signs of climax. Now, market operators want to be sneaky, so they're not always going to throw in a nice high volume upthrust candle for us to look at and go, wow, all right, that's a no-brainer. So, but you got to see that activity, and when I see, enough of these, okay, this is not bad volume, where it's up there to the average for the 3-month time frame. So, could possibly be a good sign of climaxing and institutions taking profits at these highs. We'll have to see how that plays out. Let's see now. Where do I? I don't always show the VIX in my videos, but let's take a look here. Holy smokes, we are down. This is a weekly chart of the VIX, and we are at what's the saying? VIX is low, time to go. VIX is high, time to buy. We're really at a pretty good low on the VIX, so that's something to look at. And U.S. Treasuries. Take a quick look. We have some overall hidden divergence here, bullish, but now we're seeing upthrust candles. It's telling me that this is going to be the range. It's going to be tough to get past. We did a gap fill here on this upthrust candle, but it's going to be tough to get any more out of it than that. I think we'll probably end up testing support back down on this trend line on U.S. Treasuries. And for you Forex, let's take a look at yield. This is where the markets are going to have a tough time. Okay, you get up in here to 3.9, almost to the 4% yield. It really takes a lot of shine out of the markets. This is safe money saying, man, forget the stock market. I can put my money in safe treasuries and get 3, almost 4%. Forget the risk. So that's the competition that the market is going to be facing. Now, for you Forex people, U.S. dollar is having trouble. We have upthrust candles here. This is a clear climaxing. I think we're going to see a dollar decline here. But now there is still this bullish divergence in the background. So the dollar is going to find support, but I think in the intermediate term we should see a reduction and an interesting pattern on the euro. Okay, let's look at this longer term symmetrical triangle, break above that. That's pretty much meeting targets on that symmetrical triangle. But what I want to point out here is it's very sloppy head and shoulders. And I want to point out here that a lot of people will draw a trend line from this area here down to here and call that a neckline, and that's just, you don't do that. You have to have, on a head and shoulders, you have to have an up sloping or horizontal neckline. So this yellow dash is where I'm saying the neckline is, and we had a little false breakdown below, and that consequently coincides with the top of this symmetrical triangle. And below the neckline, and I would look at this trend line and this trend line as more of a confirmation break to see whether we get the distance between the neckline and the head. I think it's very possible to see some weakness in the euro, but we're going to be watching these levels for confirmation on that. So that's your Forex view. And let's see, what else have I got? I think we're going to wrap this up here pretty soon. Of course, you can find me at HotStockMarket.com. YouTube viewers, I'm going to have links to my trading log, and at the bottom of my trading log, I source a lot of good information. Sites that you can go to have a screener in there. I have Thinkorswim as a free. I'm all about free. You can get a paper trading account. A lot of experienced traders are using the Thinkorswim platform for charting. It's good stuff. I source references in there. All kinds of nifty stuff here. Let's see. Yeah, that's just to show you down at the bottom of my trading log. Pass it up. Here we go. Good stuff in there. I have Thinkorswim scripts. These are links to my my spreadsheet that I just showed you, where I keep track of these percentages myself. It's funny that people keep track of the year from the opening of January, but there's this between the close of, I'm pretty anal about not missing anything, and somehow people that keep track of the S&P are just not doing it right. But in any case, that's my video, and I hope to see you on the boards in here. You can ask me questions. I always say it's a good thing to keep a log, and this is awesome because you can upload charts, you can refer back to this and not question what I was thinking 3 weeks ago and how did I justify this, that, or the other. So that's it for this week, folks, and I hope to see you out there on the boards.